I'm Nicholas Bornelis of Capital Inc., and I'm delighted to welcome you to today's one-on-one discussion. During the three-day period of our forum, each day we're hosting a one-on-one discussion with an in-depth focus on a leading company. And today we are privileged to have with us Mr. Chen, the Chief Executive Officer of Atlas Corporation, and he's going to be discussing with James Cirenza, Managing Director of DNB Markets. As a reminder, we are hosting today's conference in partnership with DNB. The discussion is going to focus on the maritime sector, on Seaspan Corporation primarily, and its leading initiatives across all areas, and the environmental footprint, fleet renewal, commercial initiatives, and so on. And without any further delay, I would like to thank you both for being with us, and I turn over the floor to Jim and Bink. And thank you again.
Thank you very much. And I'll give a little bit more in-depth introduction to Bing Chen, who I'm delighted to share the screen with today. Became CEO of Seaspan in 2018 and 2020. Became chairman of Seaspan and CEO of Atlas. During his impressive career, he was formerly the general manager of Trafigura in China and formerly the CEO of BNP in China. Impressive academic career, including an MBA at Columbia University, and sits on top of one of the most interesting companies in 2021. What an incredible year. So let's start by talking about the new build program. And if I got my count wrong, please correct me, but I believe something like 60 new builds announced this year. My first question, Bing, is how do you think about counterparty risk in the bidding process?
Thank you, Jim, for the intro. Just to confirm that the number of new build is not 60, it's actually 70. Yeah, to answer your question with regard into the counterparty risk in our business, I mean, we're looking at the counterparty risk constantly, whether it's a new build or it's a second hand. Anything that involves the counterparty, we do the standard counterparty credit risk profile analysis, like any other companies. But most importantly, that we're really focusing on, understanding the risk, which means that we assess the risk of counterparty and also focusing on developing the mitigations of those risks. For us specifically, that we first is that the focus on, dealing with the industry leaders in this space. As you know, that we work with 9 of the top 10 liners, so that we work with the best and the largest in the industry. The other part is that we actually focusing on customer diversification and to avoid the concentration of the customer. As if you're looking at the portfolio of our customers today, we are actually pretty well diversified compared to the 4 years ago. If you're looking at the 4 years before to 4 years later today, from a customer concentration perspective, the top 1 customer 4 years ago accounts to about 40% of our entire portfolio, and today the top 1 accounts to just slightly above 20%. And if you're looking at the top 3 customers, 4 years ago it was about 75% of the portfolio, and today it's about 50%. So we actually achieved quite a significant of diversification on the customer. And the other aspects of that is that we always ensure that whoever the customer we're dealing with, where we supply the assets, the vessels, that we have the best in-class vessels, where those vessels are most versatile and also they are best designed. So therefore, if and when on a hypothetical scenario, there's a credit event, these assets could be very easily deployed to the other customer. So that's how we actually not only understand the risk, but also very actively managing these risks And as a result, I think overall, up to today, I think we've been very successful in managing that risk.
Thank you. In the bidding process, and obviously you've been in several bidding processes this year, what kinds of returns do you look for, and what kind of contract coverage in terms of duration do you look for?
Yeah, in terms of return, not only for the bidding of the new build, but also for any kind of a second hand, what we call in general in terms of a capital allocation, we've been extremely disciplined based on the risk-adjusted return. As we publicly disclosed that for C-SPAN, that our return is on an unlevered basis is a very high single digits, return on an unlevered basis. And, it's a mid to high teen for the levered return, depends on the level of leverage. Typically, our leverage is around, between 60 to 90%. So that's the return. On the coverage of the contract, this is another aspect that I think it's very important. Is that overall the coverage is what we call back-to-back, meaning that we don't expose ourselves in a way that we take any kind of speculation. What do you mean by back-to-back? Is that really when we have any new build, when we sign the new build contract, at the same time, we also have a contract with our customer. So therefore, that's what we call back-to-back. On a specific basis, in terms of coverage on a whether it's a time charter or whether it's a variable charter, all our charter agreements are what I call hell and high water. High water by definition is that these are firm obligations of a commitment of our customers with no ways of getting out. So this is what the coverage of the contract, including the new build. I think you probably want to ask how is our new build contract is structured. Our new build contract is very similar to the hell or high water. Meaning that we have no exposure to this new build, in the sense that the price are fixed, delivery dates are fixed, the specs are fixed. So we're not subject to the commodity, to the labor, to the currency fluctuations. And then these new build contracts are also covered by the standard insurance and also the liquidation damage clauses that is in. So overall, our contract coverage are very well tight on a back-to-back basis and also on a hell or high water basis.
Excellent. Give us a little more input as to how you think about your capital structure. You obviously told us just a little bit about leverage in the last minute. How do you think about your cost of capital? How do you think about raising capital? How important is investment grade status in achieving that for a company like yourself?
Yeah, we're actually very proud of our capital structure, which is very well positioned to facilitate our business growth. In the case of this case is the new build or second-hand acquisition. Our general approach to capital structure is that we strive to have a balanced and diversified capital structure. We actually have been very well planned and focused on achieving a optimal capital structure as our business evolves. If you're looking back in 2019, we actually had $1 billion of a portfolio financing, and which this facility allows us to have the full flexibility of being able to add in and taking out the assets at our own discretion. That gives us a lot of flexibility in a way that to replace those traditional financing, which is the one vessel to a bank to financing. In this case, it's actually a facility to finance a group of the vessels. And this facility actually evolves to today from $1 billion in 2019 to $2.5 billion today with different tranches and maturity, and also different investors behind, and also has the features of sustainability linked loan. So this is one aspect of capital structure development. We actually accelerated our capital structure, started in December last year. As you probably noticed that we actually issued convertible debt in December 2020, followed by two NOK bonds, which issued in January and March in the amount of $200 and $300 million, which are sustainability linked. These are unsecured bonds. And then most recently, we also issued a US high yield blue bond, which is a tremendous success with a 5.5% of interest rate and 50% upsizing due to overwhelming oversubscription. So with that, you see that we actually have a series of these capital markets activities. And that is also accompanied by achieving the rating agency's rating. For example, we had Fitch BB rating on both the corporate and the secure debt. We also have Kroll's rating with a BB plus on corporate and BBB on a secured basis. So these are the, just a few examples of the diversified, broader, access to the capital structure, whether it's, in the space of debt, whether it's secured and unsecured. And with the increase of unsecured, which brings to the next point, this is the investment grade. As we publicly announced that investment grade is our goal. But at the same time, as you all know, that investment grade is a journey. We took a very balanced approach between the quality growth and deleveraging, because today, on one hand, we have about $18 billion of contracted cash flow. And that's a significant amount, which gives you the comfort and the basis for deleveraging. On the other hand, you see that we have a tremendous demand, the trust from our customers, and that's why we have these opportunities to have these new build. So we try to balance between growing the business with the quality growth and generating those quality cash flows. With those quality cash flows, we'll be able to delever our debt as part of the I would say part of those matrix for us to ultimately achieve the investment grade. With regard into the benefit that you're talking about, I mean, the benefits is quite broad. And ultimately with investment grade rating, there will be a significant or material amount of reduce in the funding cost. It will increase dramatically the flexibility of our access to the capital market so that we have different alternatives. And as a result, we'll further differentiate ourselves in the marketplace. So that's, I think the benefits is actually quite significant.
Let's talk about the vessels for a minute. How is this new build program different? And let's just touch base on the innovation and the vessel sizes.
Yeah, sure. With these new builds, once again, I would like to highlight all our new builds are driven by our customers, with the consultation of our, advice and expertise. So we really, do not speculate in any vessel size or proportion, the fuel systems. Rather is that we share our proprietary views and researches with our respective customers, and ultimately they will decide, number of vessels, the size of the vessels, the fuel systems of those vessels. And this is the one point that we should highlight. The other thing is that, this really highlights our integrated platform. to be able to build this number of new builds in the current market, demonstration of the shipyards who gave us the preferred terms, our financing partners giving us the trust and commitment, and also our team, the platform that Seaspan has built. We actually up to today, excluding these new build, we have actually, our team has built over 109 vessels in the past. So we really have a very strong track record of building that, which means that we have a real, system, process, and people in designing, negotiating the contract with the shipyard, with the financing partner, supervising the construction, providing the financing, and ultimately actually operating the vessel. This is very unique today that, as Seaspan today, this is a platform, the integrated platform. The company have invested over the past 20 years. This is not something that, the money can buy. It's the time, it's the investment, it's the people, process, and the systems that we have developed. Now, specifically, coming back to this, the size of the vessel, which I think you're referring to, is the 15,000 TEU and the 7,000 TEU vessels. In a nutshell, that the reason why it's the 15,000 TEU is just because, given the current alliance system, given the development of the infrastructure, and also the trade patterns, the 15,000 TEU vessels is the most suited to provide the most economical services to the liner customers. That is why that you see today, in terms of the total number of the new build, the 15,000 TEU is actually quite a significant portion of the new build, because the current existing around the 15,000 TEU vessels in the existing global fleet, the percentage is very, very low. So that is a segment that is very, very underbuilt. If you're looking at the 7,000, the current landscape in the sub 10,000 TEU category, where if you're looking at from 4,000 to 9,000 TEU segment, that accounts for about 40% of the global capacity. But if you're looking at the new build right now, it's in a very low single digits, roughly about 5% of the new build. But on the other hand, these are the vessels are best designed with the fuel efficiency, best designed with the propulsion system. So I think that these are the innovations that we have been working together with our customer in looking at the design, looking at the propulsion system, as well as from the size perspective. So these are the best assets that is going to be in the market and be very competitive for our liner customers to serve their customers.
Listen, you've already pointed out a number of your competitive advantages. All those years of experience, all the research, the cost of capital. Is there anything else to add to the list of competitive advantages that you have?
Yeah, that's a very good question. I think that today we have quite a few advantages, which is why this growth and where Seaspan to where it is today, as I said it before, in other contexts, is that we did not get to where we are today by accident. This is really because we took advantage of our uniquely positioned market situation, and also that we have our resilient business model, which is very much a customer oriented, long-term oriented business model, which produce the long-term quality, predictable cash flow. And then the other advantages is that we actually, as a company, has the ability to be able to consistently generating or creating the quality growth in the different market cycles. What you've seen right now is a new build of 70 vessels. But if you're looking at from 2019 to 2020, we actually been focusing on the quality growth in the second-hand vessels. The last year, we actually had acquired 19 second-hand vessels. Most of those vessels are all above 10,000 TEU. These are the second-hand, but they are large, high quality vessels. So this is what the ability that Seaspan as a platform that has the trust of our customer in coming to us and looking for our help. And if you said that our real advantage, the other advantage among them is the operational excellence. We have the trademark of the best-in-class operations. If you're looking at the current COVID, I think our 131 vessels in operation still achieving above 98 to 99% of utilization, and with that 1% is really primarily caused by the dry docking and maintenance. So we have a very, very reliable operations, and also, as we said before, we have a very strong balance sheet, and we have the financing capabilities where when we working on the opportunities, we don't necessarily have to put a subject to financing. And the other part is very important. This is that our creative customer partnership. We work with a customer by providing a solution. We don't provide in the vessel alone, but we provide in the vessel as part of an overall solution to their environmental, to their capacity, to their financing, to their operation needs. So Seaspan is able to, providing a solution, which is how we, differentiate ourselves in the marketplace. And if you're looking at from a specific standpoint today, how different are we? I think today we can look at from three dimensions. First of all, today we are the largest, fleet as in the owner operator space by the TEU. Just to give you some, stats, right? From a fleet perspective today, our existing operating fleet is about 2.6 times to the average industry fleet size. If it's on a fully delivered basis, assuming the 70 vessels been delivered, we will be 4.5 times of the industry average. We also have the youngest fleet. On existing fleet basis, we are about 2.5 years younger. On a fully delivered basis, it's about 6.2 times younger. And we also have the longest contracted period. If you're looking at from the existing fleet perspective, we are about 1.5 years longer than the industry average. And if you're looking at the fully delivered basis, we are about 4.5 years longer. That's what I highlighted before, that today we actually have approximately $18 billion of contracted cash flow. So these, if you're looking at from these, both from the business model and also just from a fleet composition and also from the contract perspective, these are the real, the differentiating aspects of Seaspan.
Ding, I've only got time to ask you one more question, so I'm not going to let you get away without giving us your market outlook. For the fourth quarter, for next year, as far as you'd like to give it, we'd love to hear your view on the container market.
Yeah, I think by talking to our customers, the general consensus is that the market in general are rather, I would say, fundamentals are still solid. If you're looking at from a demand side, from a supply side, demand side still remains to be strong. Of course, the current situation is been primarily driven by the logistics congestions. But if you're looking at purely from a fundamental demand side, first of all, you have the growth. The industry still projected the growth of the demand year over year in the range between 3 to 5% per year on a container demand side. And then, the liner companies is very well positioned because the industry, it's consolidated in a way that they are very disciplined. And then if you're looking at the pattern of the consumption, I believe that with the e-commerce, that will add to another dimension of the demand. So the overall demand is rather solid going forward. On the supply side, yes, right now we do have a spike on the supply side in terms of the new build. But if you're looking at over a period of time of last 4 years and in the future, the next 4 years, if you're looking on an average basis, it's about 7 to 8% per year. And if you're taking into the growth of the demand side, you're taking at the growth on the supply side, and also subtract some scrapping, which hasn't happened over the years. So this is why we believe that the fundamental demand and supply still holds based on the current order book and also based on the current demand. So overall, I believe that this market, with and without the COVID additional, impact on the demand side, I believe that the fundamental is still balanced, in the future.
I want to thank you very much for joining us today, all the way from China. And it's been a pleasure to spend this last half hour with you. Thank you.
Thank you. Thank you. Thank you very much.